Welcome back to our show, your show. Let's talk stocks. In studio with us this morning, Mr. Ryan Strawn of GK Capital. And of course, we're going to be having an excellent chat about the status of the stock market in Jamaica today. And maybe we'll look internationally too, who knows. Welcome, Ryan.
Thank you, Nielsen. Thank you. Good
All
to
right.
hear.
So Ryan, really thank you for coming. We're at a time when the market has been going down. Markets across the world has been going down. Many people are a little bit nervous about the Jamaican situation. What's your view on how the market has performed so far in 2023?
Good question. Well, first good morning to your viewers, listeners. Thanks for having me. The truth is this, the markets have treaded water for a fair amount of this year. I don't think we've had an IPO so far this year.
No, we haven't.
We've had a few announcements, press releases. Be that as it may, we hear of the pessimism in the markets. I believe there's been some sensationalism regarding the markets.
Yes.
And I believe there's a lack of context where the market is concerned. But despite that, we have had a few performers in the market. So let me backtrack. We had the announcement of COVID-19,
Yep.
economic pressures, markets the world over fell.
All over the world.
Finance companies stopped paying dividends for a while. So confidence was eroding. USA, Europe, Jamaica, UK. With the passage of time as vaccines were introduced, we started to see confidence return to the US. And consequently, the markets returned to where they were pre-COVID and started to rise a little bit. Performance of the companies as well recovered. In Jamaica, we had the companies recover. We had some financial institutions paying dividends. But broadly speaking,
Dividends has been absent.
dividends have been lower, but the markets have not recovered yet. I believe that's down to confidence. I believe that's down to maturity in the market. And I believe it's also down to, as I would have said before, perception. And our market is skewed towards a few large players.
True.
NCB, Sagicor, Scotia, Grace Kennedy, Massey,
Yes.
Trans Jamaica, Wigton, maybe a few more. I mean, I said Cinco. So if any two of that 7 or 8 flounder, no matter if the other 88 listed or 98 listed companies do well, it's going to drag the market because they're disproportionately bigger than the rest.
And
Contrast,
we're talking about the capitalization. of these
capitalization,
companies.
the main market index that they use to track
Right.
performance year over year. So one could say, oh, well, because NCB is at 70 from 200, the market has slid, right? But an NCB is reported more profit now than it did in 2019.
That's an interesting that you chose NCB. Some of the things that you spoke about. So NCB was one of those financial sector companies which stopped paying dividends. And I would say wisely so,
Absolutely.
because you now have more money to reinvest. In a time of opportunity, cash is king.
No question.
So the managers of the company clearly decided, let us hold this cash for the opportunities going forward.
Absolutely. I think that was the right strategy. I was looking at the numbers. NCB did $40 billion in profit 2022, September, year end. But you don't hear that. How many listed companies do $40 billion in revenue?
Are we talking about profits here?
We're talking about profits. So the scope of NCB, I don't think is appreciated.
No, it's not.
Therefore, it would not surprise me, and I have no idea. But I did some math this morning. It wouldn't surprise me if it was ever sold for 2.5 to 3 billion US. Just based on that level of profitability. So people say, oh, well, but we're not getting dividends. Sure, for now. but you're getting the most profitable company in the country.
So NCB, in your estimation, is at a discount right now.
Yeah, I believe so. It has to be by virtue of the scope. Now we need to appreciate what do we view NCB as. So Scotia, as a commercial bank,
Yes.
has reported the most profits of all of the commercial banks from that unit. Banking sector. Commercial bank. Scotia has been prudent in deploying the cash. They've had it able to grow the loan portfolio, pick the best, get others to switch. Great. But NCB is a financial group.
Yes.
And I'm not an NCB advocate, I'm just speaking about value as it's presented.
And that's what the market is about.
Absolutely.
We buy value. We buy
Absolutely.
value over the long term.
Absolutely. Because in 2019, when they were finalizing Guardian and everything, the stock was at 200. And people, including me, were optimistic about the future. Sure, there was a capital adequacy or a capital ratios, may I give one a little, concern. But past that, overall, massive growth. So the point I'm making is there's confidence issues for now. And I give you one other real story.
Yes.
When things were turbulent during COVID, we didn't really know where the dust was going to settle. We didn't know if supply chain disruption would have been permanent. Would it shift from area of location? What dynamics would remain locally? What would disappear? We had virtual meetings. We had virtual commerce. We had physical stores under pressure. You had work from home. And you had delivery services going like that. And you had people saying, will this be permanent?
Yes.
If you look at
the new normal.
It's the new normal, right? You see Amazon,
Yes.
outsized business, locally mail pack, 5 years of growth in 6 months, right? And everybody's now asking, will this remain the same? For an investor, I said, infrastructure is really the new wave because we know we're still going to drive on the roads, we're still going to use utilities, we're still going to have students going to school. So let's look at a few infrastructure stocks. Wigton IPO'd at 50 cents, went up to 80, fell back to 51 during COVID.
Yeah.
Trans-Jamaica IPO'd at 140 something, never really went anywhere, stayed flat. I think it went down to 130, 120.
Yeah.
We said we like infrastructure. Wigton had one issue, which was the phase 2 was coming under time for renewal, and there were questions about how would that be funded. Wigton today is 80 cents, 83 cents. Trans-Jamaica today is $2.10. Why? Both have grown.
Both have doubled their IPO.
Both are way,
Yeah.
80% or whatever in down markets. Right? But there is a value to that stability. So one can say, and these are very liquid stocks, millions of units a day. So it's the free market driving it. So nobody can look at that and say, oh, well, we're not seeing money being made anywhere. For the investor, it was always a thing of where do we look in light of this new normal. Now, I think the investor should, instead of being swayed by, the market is up or down. I saw a headline saying $5 billion. But it went up $5 billion on Friday, which was the end of the quarter.
Nobody saw that.
That never came up as anything, and it normalized on Monday. For whatever reason, end of quarter trading is extraordinary. It made a great headline. Is it accurate? I don't believe so. The reality, there are still things making money now, and there are still companies making money that are undervalued. So the investor has to decide, do they want to invest? Do they want to speculate and complain when short-term winds blow them all over the place? 'Cause I can tell you, when people thought back to Wigton and Trans-Jamaica, they were saying that they're suffering, but they wouldn't be saying that now.
Exactly. When we look, Ryan, at these kind of events, so the markets have, Internationally, we've seen in Germany, I think it's the DAX 40, which is trading at new highs. We've even seen in New York on Wall Street, indices hitting new highs, even in this time of high interest rates, of uncertainty as to whether the Fed is going to raise rates again. We're seeing that internationally. Jamaica, we are told, is back at pre-COVID levels, which means the companies will benefit from that kind of consumption and economic performance.
Absolutely.
Why would we not think that there's value in the market?
I think it comes down to maturity. I think a lot of investors came in the markets in 2015.
Yes.
Right after the Heineken Red Stripe buyout, when the market appreciated 50% in 8 weeks. Right? From when it was announced in September to the end of the year, the index grew 52%. That is how investors have been spoiled.
But isn't that right? Isn't, as you talk about that Heineken Red Stripe buyout,
Right.
and we've seen, certainly from your parent company, Grace Kennedy, Western Union, we saw that transaction again.
Right.
And you remember way back the Lascelles transaction.
Right.
All of these has shown that there's a hidden value, latent value in these Jamaican companies.
A lot.
And when the market is ready, the market will take advantage of that value.
And the market will reward you for that value. So there's so many examples, and I said to people that, do you want to wait until that's validated by an outsider? Or do you want to buy and hold it and own it as an investor? That's really what it comes down to.
What it comes down to.
People will trade a stock that offers no value. The business, I guess the best way to sum it up is like this. We need to look at the market not as a bunch of numbers, but as a combination of a number of businesses that operate, that hire staff, that give staff benefits, that pay salaries, that can hire more staff, buy buildings, buy machines, right? Keep the ports buoyant. That's what the market is. It's not just ticker symbols. These are real life companies.
By and large, a summary of the economy in which we exist.
And whether it takes a week, a month, or 2 years, they will align. There's no doubt. It has to happen. The multiples now are back at a significant discount to the global range. We have inflation under control. We don't have devaluation of any consequence right now.
Not for the last maybe 2 years.
Yeah, it's
Even with the pandemic.
Even with the pandemic. Reserves are higher now than before. Is all rosy? No. But the point is, anything that's required for upsize growth is there. You mentioned the acquisitions before. They say you need to dance a yard before you dance abroad. It's interesting that it took a foreign company spending $750 million in Red Stripe to stimulate the market. And there were people who could have bought small enough volumes of Red Stripe for the common man. I tell people stock is for the common man. It's not for the rich person. This common man can come to the table with 10,000, 50,000, 200,000.
It's a great equalizer.
Absolutely. And by the same stock that the rich man couldn't buy or not get his volumes. And if he makes 100%, he makes 100%.
I said that all the time.
But people keep giving it and saying, no, it's for the big man. And throwing away the pearls in the hands to swine, so to speak. And we wait on foreign entities to validate the value that's been before us all this time. And I'm simply saying, let's buy it now. So that we can be approached to sell.
And even if it gets cheaper after you buy some more.
Yeah, because they're still hiring more people. Your friends still work. You're able to say to your friends, boy, they're going to lay off people at your job. They say, no, we're hiring more. Hiring freeze done. You want to work? You know? And these are the things that are happening every day around us, and we're not, it's not being perceived or taken up widely enough for reasons I don't really get. But as I said before, investors now are probably going through their first bear market. It will end. The USA bear market ended last week officially. So the point is, should they go through another cycle, then they will appreciate this. Do I think we'll see something like this again? Maybe not. But I think it's a good learning experience.
And if it's a maybe not, that means we have a lot of value on the table being given away.
No.
Right.
Yeah, for free. We won't see these kind of multiples again. And, you know, I said to people, listen, yeah, you can buy stock and try and make 20%, but it's really supposed to make you, to create a paradigm shift in your economic reality. You're hitching your boat to a larger vessel, and that vessel will carry you. All you need to do is hold on.
Great point on which to end, Ryan. I really want to thank you for coming and giving the people an insight as to what is happening in the stock market. Values abound. Stocks at a discount. We looked at NCB. Yes, the dividend might be absent, but the cash is being reinvested in opportunities. Yeah. And as we always say here on Let's Talk Stocks, we give you information to make better financial decisions. Come back with us tomorrow morning at 9 when we have another wonderful program lined up for you.